All right, welcome to Talk Tickers, everybody, the show where we break down the noise from the latest earnings calls and help you figure out what really matters. Today, we're diving deep into Tencent's latest report, unpacking those financials and their strategy going forward.
Yeah, they just wrapped up 2024. And it's interesting. They really came out strong with some accelerating growth in a lot of key areas. I mean, their total revenue hit 172 billion RMB. That's an 11% increase year over year.
11%. Wow. That's pretty significant for a company already as massive as Tencent, right? It sounds like they've got some serious momentum.
Totally. And it's not just revenue. We're also seeing a huge jump in their profitability. Gross profit reached 91 billion RMB, a 17% increase year over year. So, it's not just that they're selling more, they're becoming more efficient as they do it.
So their operations are getting streamlined, or maybe their higher margin businesses are really starting to take off. That's interesting. But what about their core operations? Like, what are we seeing there?
Well, if you look at the operating profit, specifically the non-IFRS number, because that gives us a better picture of the ongoing performance of their core business, we see an even faster growth rate, 21% year over year, reaching 59 billion RMB.
All right, so that's a really good sign, right? It's telling us the business is healthy at its core. And how about the net profit? What's the bottom line look like for Tencent?
Their net profit attributable to equity holders, again, looking at the non-IFRS figure, that surged by an impressive 30% to reach 55 billion RMB. So, putting these numbers together, it really paints a picture of a successful quarter, a successful year for Tencent overall.
Yeah, no doubt about that. And they aren't just keeping all that profit for themselves, are they? It looks like they're also taking some pretty significant steps to reward their investors.
Absolutely. They've proposed a pretty substantial 32% increase in their annual dividend. That brings it up to 4.5 HKD per share. On top of that, they did a lot of share repurchases in 2024, totaling 112 billion HKD. And they've already said that they're going to continue this in 2025 with at least 80 billion HKD allocated for more buybacks.
So strong performance, a clear commitment to returning value to shareholders. That's a good combo. But let's dig into what's really driving all this growth. One thing that jumped out was their big push into AI, right?
Yeah, absolutely. What's really fascinating about Tencent's AI strategy is how comprehensive it is. They've been investing heavily in their own, what they call foundational AI model, which they named HUN UN since back in 2023. And they're not just focusing on one little piece of it, they're building out capabilities across the whole thing. Imagine building a skyscraper. They're not just putting up some fancy decorations on the top floors. They're making sure the foundation is rock solid from the ground up. They're covering the infrastructure, the algorithms, all the way to data management, which is super important.
That sounds incredibly ambitious. So what kind of progress have they actually made with these models?
They've hit some major milestones, especially with their large language models. The AI that powers things like those sophisticated chatbots, text generation, all that stuff. They've really advanced the architecture of these models, like using something called mixture of experts, which is a technique that helps these models handle way more information and do it more efficiently. They even developed specialized models like HUN UN Turbo S, which is really good at processing long sequences of information, like really long. And they're putting these models to work too. They recently launched something called HUN UN T1, which is their deep thinking model. And they're saying it's comparable to the top models in China.
Wow. So AI isn't just about text anymore, is it? I remember seeing something about their work with images and video too, right?
Oh, absolutely. They're not putting all their eggs in one basket. They've developed these really cool multimodal HUN UN models that can work with images and video. They can even generate 3D content. In fact, their video generation model, it actually hit the #1 spot on the Hugging Face platform, which is a pretty big deal in the AI world back in December 2024. And then they released a 3D model that was a first for the industry. It's open source, and it could generate 3D objects using either text or image input.
That's really impressive stuff. And it sounds like they're not just keeping these advances to themselves, right? They're actually getting the whole AI developer community involved through these open source initiatives.
Exactly. They're really active in contributing to the open source AI community. Basically, they're making the code for some of their HUN UN models publicly available so developers can use it and even build on it. And people are actually using it, which is great. It's getting some serious traction globally. So, this is a smart move by Tencent. By making it open source, they encourage wider adoption, get feedback from all these developers, and that's going to help their AI technology evolve even faster.
Makes sense. So all this stuff behind the scenes is great, but how is it actually impacting real users? How are consumers experiencing Tencent's AI advances?
Okay, so their approach to consumer-facing AI is what they call multimodal. Basically, they're using different models depending on what the user is trying to do and what they need. The best example of this is their AI native application, UMBO. This thing saw a crazy 20-fold increase in daily active users just between February and March of this year. It's quickly becoming one of the leading AI mobile apps in China.
20-fold! That's wild. They must have hit a nerve there. What's so special about UMBO?
It's a few things. First, it has access to all of Tencent's own content, which is a huge library. And it can process all kinds of user requests, whether it's text, voice, or even images. It's really versatile.
So it's like the ultimate content hub powered by AI. And what about their flagship platform, Wexon? Are they bringing AI to that too?
Oh yeah, they're weaving AI into Wexon in some pretty cool ways. We're talking about better search, smarter language input, even tools for generating content right within the app. And think about it, Wexon has, over 1 billion users? So even small improvements powered by AI can make a huge impact.
It's all about playing to their strengths, right? So Wexon for the individual users, but what about their services for businesses? Where does AI fit in there?
On the enterprise side, they're embedding AI across their cloud offerings. And we're talking about all levels here. Infrastructure as a service, which is where they provide the raw computing power and storage needed for AI, all the way up to platform as a service, where they're offering tools for things like, fine-tuning AI models. And then finally, software as a service, where they're adding those AI-powered features to things like Tencent Meeting and Tencent Docs, the tools businesses use every day.
Pretty comprehensive approach, it seems. And I saw that their AI cloud revenue actually doubled year over year in 2024. But there was also some talk about some constraints. What was that about?
Okay, so this is really interesting because it points to this kind of strategic tension within Tencent. See, they've been allocating more of their GPUs, those specialized processors that are crucial for AI, to their own internal AI initiatives. Like they're using them to improve their ad tech and train their foundational models, which are huge projects. But that means they have fewer GPUs available for external cloud clients. And that actually limited the growth of their cloud services revenue in the short term.
So they're prioritizing their own AI development, even if it means slightly slower growth in their cloud business right now.
Yeah, and it makes sense in a way. They've increased their purchases of GPUs significantly, and they think that once those are deployed, they'll see an acceleration in their cloud revenue. They're betting on their own AI capabilities being a bigger advantage in the long run.
Makes sense. It's a trade-off, but it could pay off big time if their AI ecosystem really takes off. So besides cloud, where else is AI starting to make a real difference in their bottom line?
AI is already generating some pretty solid returns in a few key areas, like in advertising. Their marketing services revenue saw a 20% jump in 2024. And a lot of that came from the improvements they made to their ad tech platform, the better targeting they can do now with AI, and even using AI to create better ads. They're calling it generative AI, and it's getting some serious buzz in the industry.
Sounds like AI is doing some heavy lifting there.
Yeah, and it's not just advertising. In their gaming division, they're using AI to optimize player matchmaking, which is a huge part of those multiplayer games. They're even using AI for coaching tools and helping with content production. And in their video and music streaming services, AI is streamlining content creation and making those recommendation algorithms even smarter.
Wow. So AI is more than just a future bet for them. It's already contributing to their success in some pretty big ways. And speaking of future bets, they also did a major reorganization of their AI teams and significantly increased their capital expenditure. That sounds like they're really serious about this.
No doubt. Their annual CapEx, it more than tripled in 2024. They spent $10.7 billion, which is like 12% of their total revenue. And get this, they expect that number to climb even higher in 2025 into the low teens percentage of their revenue. That's a serious investment.
That's a lot of cash. Where is it all going?
Well, a big chunk of it is going towards acquiring more of those GPUs and the servers they need to run those massive AI models. Their R&D spending also got a boost. They're not messing around.
Okay, so they're all in on AI. But let's shift gears a little and look at the performance of their different business segments. Value-added services, or VAS, is a big part of their business, right?
Yeah, VAS covers things like games, social networks, and other digital content and services. That segment saw a healthy 14% year-over-year revenue increase. Their social networks revenue grew by 6%, mainly from in-app purchases in those games that are embedded in their platforms, music subscriptions, and those mini games they're famous for.
They're still doing really well with music, right? I remember seeing something about that.
Yeah, their music subscriber base hit 121 million, which is a big jump. And that led to an 18% revenue growth in that area. Even their long-form video subscriptions went up a little, about 3%, reaching 113 million subscribers.
So steady growth in their content subscriptions, which is good to see. But of course, we can't talk about Tencent without talking about their games. Both in China and internationally, they're still a major force, right?
Oh, yeah. Gaming is a huge part of their success. Their domestic games revenue in China surged by a massive 23% year over year.
Wow, 23%. That's pretty incredible. What's driving that kind of growth?
It's a combination of their evergreen titles, like Honor of Kings, Peacekeeper Elite, and Valorant, which are just consistently popular. But they're also seeing some great contributions from newer games, like DNF Mobile and Delta Force. And they're smart about leveraging collaborations and in-game events to keep players engaged. Delta Force, that one game alone, brought in over 1 billion RMB in gross receipts in just the fourth quarter of 2024. And they've got a lot more coming down the pipeline. Games like the HUN UN and Valorant Mobile are generating a lot of buzz. Plus, their top 5 highest grossing games, all of them saw an increase in daily active users during the Spring Festival holiday, which is a big deal in China.
So they're really good at keeping those core franchises strong and fresh, but what about their international gaming strategy? How are they doing there?
Their global expansion is going well too. Their international games revenue grew by a solid 15% year over year. They've got some major hits globally like Brawl Stars and PUBG Mobile that are doing really well. And they also had a successful early access launch for Path of Exile 2, which is generating a lot of excitement in the gaming community. Brawl Stars was actually one of the top mobile games worldwide, excluding China, based on daily active users in 2024. Path of Exile 2, that one hit the #1 spot among premium games on the Steam platform after it went into early access. And even Warframe, which has been around for a while, saw record engagement and revenue after a big content update.
So it looks like they've got a winning strategy for gaming both at home and abroad. Now let's talk about their marketing services segment, which also saw some pretty impressive growth.
Yeah, marketing services had a strong year. They reported a 17% year-over-year revenue increase.
What's behind that jump?
It's a few things. First, they've got higher user engagement across all their platforms, which is always good for advertising. But they've also made some serious improvements to their advertising platform, particularly with their AI-powered tools. Their video accounts advertising, that saw an explosion of growth, over 60%. Their mini programs advertising, that's growing fast too. And their Wexon search advertising revenue more than doubled.
Wow, those are some impressive numbers. What's driving the success of their Wexon search advertising?
Well, they're seeing more commercial search queries, which means people are using Wexon to find products and services. And their AI-powered ads, those are getting much better at targeting the right users. They've seen growth across a bunch of industries like e-commerce, finance, consumer goods, gaming, you name it. It's a pretty broad-based success story.
Sounds like their AI investments are really paying off in their advertising business. Okay, let's look at fintech and business services, which had a bit more modest growth, right?
Yeah, that segment reported a 3% year-over-year revenue increase.
Still positive, though. What's the breakdown within that segment?
Within fintech services, they've seen their revenue growth resume at a low single-digit pace. They're benefiting from increased commercial payment volumes, growth in their wealth management offerings, and they're doing more consumer loans. Their commercial payments business was pretty stable compared to the previous year, but the volume of transactions actually accelerated.
So even though the revenue growth was modest, there are some positive underlying trends there. What about the business services side?
On the business services side, they had some modest growth, driven by higher revenue from their cloud services, and they're also getting higher fees for the technology services they provide to e-commerce businesses. But remember that growth in cloud services revenue was kind of held back because of those internal GPU allocations for their AI projects.
Right, that makes sense. Any other bright spots in business services?
Well, their gross profit margin for business services actually improved, which is good news. And Wecom, their enterprise communication platform, and Tencent Meeting, their video conferencing tool, both saw really strong revenue growth. So that indicates that more businesses are adopting those tools.
So some mixed signals in fintech and business services, but some definite positive trends emerging. All right, let's zoom out a little bit now and look at the overall financial picture. What are the key takeaways beyond the individual segment results?
Okay, big picture. Their gross profit margin improved to 53%, which is up 3 percentage points from last year. That improvement was mainly driven by the growth in their higher margin revenue streams, like advertising and gaming. And they're also seeing those cost efficiencies we talked about earlier. Their non-IFRS operating profit margin also increased to 34%, another 3 percentage point jump. But as we've discussed, their operating capital expenditure went up significantly because of those investments in GPUs and servers for AI.
Right. That's a big investment in their future. How did that affect their cash flow? Because of the higher spending on those assets and the timing of some of their expense payments, their free cash flow actually decreased, and their net cash position decreased as well, mostly due to the CapEx and those share buybacks they did.
So they're making those big investments for future growth, and that's impacting their cash flow in the short term. But their underlying profitability is still looking very strong. Now, let's put this all into context for investors. What are the key takeaways from this deep dive into Tencent's earnings? What should people be focusing on? Well, the big takeaway is that they had a really strong fourth quarter in 2024. And it shows that their strategy of focusing on high-quality growth is working. We're seeing the positive impact of their AI integration across all their different businesses. And they're not just dipping their toes into AI, they're making significant investments in AI infrastructure and talent. That puts them in a great position to capitalize on the future growth in both the consumer and enterprise markets. And their commitment to returning value to shareholders through those increased dividends and the share buybacks, that signals a real confidence in their long-term financial health and prospects. So they're performing well in their existing businesses and making those strategic bets on the future. Sounds like a good combination. Yeah, and don't forget about their core gaming division. Their key games continue to perform really well, and they've got a strong pipeline of new releases coming up. Plus, the rapid growth in advertising revenue from those video accounts and Wexon search, that's a testament to the improvements they're making to their ad platform with AI. And their fintech services revenue, that's recovering, which is a good sign. Even though their cloud services growth was a bit constrained, they're addressing that with those new GPUs they're deploying. So overall, a lot of positive momentum here.
Okay, so a lot to be optimistic about with Tencent. Now, before we wrap up, let's have some fun with our This Is Not Financial Advice segment. What's an outrageous but plausible trade idea that comes to mind after this deep dive into Tencent's earnings?
Okay, let's get a little speculative here. Remember, this is just for fun, not actual financial advice. So, Tencent is going all in on AI, right? They tripled their CapEx on GPUs and servers, and they're expecting this huge surge in demand for their cloud AI services as they get all that hardware up and running. But here's the thing. The bottleneck isn't a lack of interest in AI. It's the actual capacity to provide the computing power that everyone needs. So what if, instead of directly betting on Tencent, we look at the companies that are actually supplying the picks and shovels for this AI gold rush?
I like where you're going with this. So you're talking about the companies that make the specialized chips and the data center infrastructure, right?
Exactly. Outrageous but plausible trade idea number one. The AI hardware enablers. These companies might not be the big flashy names that everyone knows, but they're the ones that make the whole AI revolution possible. If Tencent and all these other companies are scrambling to get their hands on this crucial hardware, these suppliers are in a really good position. They could see some massive gains as demand for their products just keeps skyrocketing.
Okay, so a bet on the infrastructure layer, the foundation of the AI boom. I like it. Got another crazy idea for us.
How about this? We've been talking about how Tencent is using AI to create content for their video and music services. And they've also mentioned some interesting things about AI-powered interactive experiences and virtual commerce within Wexon using their mini programs. So what if we look at the smaller, more agile companies that are developing those really cool, cutting-edge AI tools specifically for creating interactive content?
Okay, I'm intrigued. How would that play out as a trade?
Outrageous but plausible trade idea number two, the AI-powered interactive content boom. Look for those companies that are building the tools for creating immersive virtual experiences within platforms like Wexon mini programs, or the ones that are developing AI that can generate personalized interactive content. As these big players like Tencent try to scale their content offerings and create more engaging experiences, they're going to need help. And it might be faster and more efficient for them to just acquire or partner with these specialized, innovative, smaller firms. So it's a bet that the demand for AI-enhanced interactive content is going to fuel a wave of growth and maybe even some strategic acquisitions.
Two really interesting and definitely unconventional trade ideas. But remember, everyone, this is all purely hypothetical, not financial advice. So there you have it, folks. Your in-depth look at Tencent's latest earnings call. We've covered the key financials, their ambitious AI strategy, how each of their business segments are performing, and even threw in a couple of crazy trade ideas for fun.
What stood out to you from this deep dive? What are you most excited about with Tencent, and what questions are still lingering? We always encourage you to do your own research and dig deeper into the things that pique your interest.
And be sure to join us next time on Talk Tickers as we break down another earnings report and try to make sense of the financial world. Until then, remember, this was just our informed analysis, not financial advice. So stay curious, stay informed, and we'll see you next time.